Yashish Dahiya is now joining us. He's our next guest, Chairman and Group CEO at PB Fintech. Mr. Dahiya, good to have you with us here. Good morning. We spoke early February extensively about your plans for the healthcare foray, and that foray is taking shape. You're investing almost 700 crores in the business. Let's start with that. Tell us a few things. When will this venture be rolled out? You're setting up some hospitals, subscription-based. And will there be further investment? You've said you'll bring in outside investors as well. Will you be putting in more money? When is that going to happen? And then tell us, there have been some concern in the market that, the focus here is not profitability. At least that's the view of some analysts that I've spoken to. If you can clarify on that as well. Go on, sir.
Sure. So, sorry about that. Essentially, what's happening is we have about 4 crore people in India who buy health insurance. And what we are creating is a facility for the health insurance industry, which includes everybody who has a health insurance to have essentially their own family doctor who advises them on what's the course of action they need to take. This person is not incentivized by how much they get treated or by what operations they have. This person does not make a referral fee. And what that implies is that this person can be fairly unbiased and be like a friend to the consumer and thus advise the consumer on whether they need to go to a hospital and which kind of hospital is right for them. At the next level, there is a network, which is a narrow network compared to the wide network that exists today. The wide network is about 14,000 hospitals in the country. You may select a small percentage of them, whatever the number be, 200, 400, 500 hospitals. And these are the hospitals where these consumers can go. And as long as they go there, their experience on the claim side is made very smooth. That is the whole approach. Now, out of this network, in one particular city, we would own that network. And the reason for doing that is principally to make sure that the experience from a technology perspective, from a consumer service perspective, is built to a different level, which we envisage can be a game changer for the consumers in terms of their experience. And then perhaps once that is proven, to roll that out across the network per se. Now, when you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. I don't think it is for everybody and anybody, for the entire market to agree on what is the return they expect from that. They believe there is a return, that's why they are investing. A bit like when InfoEdge invested in Policy Bazaar way back in 2008. Many people believed it was not a great financial investment. They have made about 100x return.
Yeah.
So I would say let them who are putting their money be the best judge of whether putting their money is worth it or not.
No.
Yes, you are absolutely right. From a PB Fintech perspective, it is not just a financial investment. From a PB Fintech perspective, the fact that the health insurance customers get a better experience helps the industry do better and helps PB Fintech, which is a large, player in the health insurance industry, do better. And so clearly we have a bias, strategic reason to do this beyond the financial investment. But that does not mean that is the case for everybody. A lot of the investors coming in are pure financial.
No, I completely agree. But the only thing is that PB Fintech will have about 34% stake, right, in this entity.
Yes.
So you are kind of the prime driver. So
I think by the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25, 26%. And from a strategic perspective, because I know who the other investors are, I do not believe PB Fintech is the long-term strategic driver of this project. It is at best an incubator and a catalyst.
You,
It is not the long-term owner of this project, and nor is it the long-term driver of this project. At least two of the investors coming along are much more in that category than PB Fintech.
Can you tell us who are the other investors?
I have confidentiality. Like in any agreement, you cannot disclose people till the deal is done. And that is a pretty obvious thing. I don't know why people want to know that before the deal is completed. And the deal cannot...
So you're saying after the second round of fundraising, your PB Fintech stake will...
It is after the first round is complete, which is 90 days after the shareholder agreement is signed.
Right.
PB Fintech would be about 25%.
Okay, so PB Fintech stake will be down to 25%. That's an important point. You're saying for PB Fintech, it is not purely a financial investment, but one should not assume that, I mean, there are outside investors who want a return on their investment. So
I would hope so, unless they don't like their money.
But, and you're saying, the only problem is that you right now also said that for PB Fintech, it is not. So 25% is also a significant stake, and you are the man driving things, right? I mean, people are betting on you, Yashish. So when you say that financial return is not the sole driver, the sole motivation for this, hence that question. That is the only thing.
Let me explain. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. And that's why it takes us 14 years to have broken even. And yes, we will make profits as well, like we are doing right now. But that is not the primary objective of our business. The primary objective is the purpose with which it is set up.
Absolutely.
For PB Health, the primary objective is giving the customer a great experience, making the insurance smoother. The primary objective is not to just make a profit.
Sure.
For any mission-driven business, your primary objective is not always to drive short-term profits.
No, absolutely. That's a very sort of noble, way of looking at it. But just to get back to some specifics,
I can't see another way to look at it.
No, the thing is that there are also shareholders, there are public shareholders, so we have to ask you the profit questions as well. I mean, that's the compulsion from our side. So just to go back,
the public shareholders have got enough information to make a decision, which they have to make over the next 25 odd days on whether this is a good project for them or not.
Absolutely. So Yashish, just
to do it, and I don't think the profitability of this particular venture should be the primary decision maker for them on whether they need to invest or not invest.
That's an important point, and thank you for being candid enough to say that for shareholders they need to think beyond profits as being the primary motive when they're coming to that decision. But just let me get to the specifics. What you're saying is that over the next 90 days, by the time the first round is over, PB Fintech's stake in this entity, PB Health, will come down to 25-26%. That's point number one. Since and for how long do you foresee PB Fintech holding at least this 25%? I heard you. You said over the long term, PB Fintech will not be the owner and driver. So for the foreseeable future, 2-3 years, do you expect PB Fintech, the listed entity, to continue holding at least 25%?
I don't know. PB Fintech, as of now, I don't envisage PB Fintech investing anything further. Now, what that means is, if 1 year down the line we raise more capital, PB Fintech is not participating, so of course it will get diluted. How much we will raise, I don't plan things to that level of detail right now.
Okay, sure.
Right?
Take that point
for the first 3 years, but that does not mean we will not raise more capital.
Okay, fair enough. So there could be further dilution, but you don't know how much and when at this point.
Yeah, at this point, I do not envisage PB Fintech ever having to invest again. Now, that is not a commitment that we will never invest. But what it means is I don't actually envisage it. I don't see it.
You don't see that need. You don't see that need at this point. Now, I must ask you the question of some basic assumptions, because like I said that, as of now, there are public shareholders and they will have to decide whether to sort of participate in this or not. For their sake, just some estimates, because you would have done some basic homework. This kind of an investment, I mean, what is the kind of IRR, ROI, what is the kind of profitability margins? I'm sure you and the teams have done some basic math around this. If you could,
I think
you know,
there is a
shed some light.
50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it'll be very big. In a way, when we started Policy Bazaar, how much projection did you want me to make in 2008?
Right.
I, of course, have a projection, and I have shared that with our board, and we have shared some of the things with our own shareholders in terms of why we are doing this project.
Right.
We have also shared it with the other financial investors. And I don't think, for a private company out there, we are going to put, our projections every year out there. We don't even put projections for Policy Bazaar or PB Fintech. You do appreciate, right? I don't even disclose what our profits next year are going to be for PB Fintech.
No, we understand that, but past has it, and you said that shareholders have enough public information to make a call on what they want to do with their investments in PB Fintech.
Yes, and I'm clearly saying there's a 50% chance the project will fail.
Right. We take that point. And, apart from just this foray, there have been concerns around growth for your own core business as well, as there have been for Paisa Bazaar too. Though there have
Let
been,
me try to
yes, please go ahead.
allay your fear on the core business. In the year of the IPO, we did about 5,000 crores of premium. Right? This year, the core business alone, outside of POSP, so we are doing 23,000 crores. Let's say 5,000 crores is POSP. That's 18,000 crores. How much growth do you want? Is 5,000 to 18,000 not enough growth? In 3 years.
We get that, but it has to be relative to the industry as well, right? The street is betting on you growing
industry, my friend.
1.8 to 2 times
right?
industry is what the street is penciling in.
Yeah, I think it's about 3-4 times the industry. If you really do
And
that math, from 5,000.
And you believe that you will continue to grow at 1.8 to 2 times?
What is that?
No, you believe that you will continue to grow at 1.8 to 2 times industry?
I don't think we give projections in that manner. I hope that we do grow faster than the industry. But all I'm saying is in the last 3 years, we have grown at about 3 to 4 times the industry.
Okay, and what about the disbursement growth in Paisa Bazaar?
Over the last 3 years, that is also the case. However, of course, during last year, there was a credit squeeze. So the disbursal would have gone down. That is obvious.
Have you seen signs of improvement, and do you expect them to improve?
Month on month, we are seeing signs of improvement now. I think if you were to think about it, maybe November was the lowest month. And since then, month on month, we are seeing signs of improvement. But I don't think anybody was, on the unsecured business side, able to display, significant growth as a market till November. But yes, now we are seeing signs of easing and signs of growth. Plus, the secured business has grown very well.
Yashish, by the way, I must say, Prashant, I love it. 50% chance success or 50% chance of failure. But, I think only you can say it and get away with it. You build the business,
There's nothing to get away with it, my friend.
No. I mean it as a compliment. I don't mean it in the sense that, I started by saying investors are betting on you because you built that business and you said, and towards the tail end, you said if it succeeds, it'll be very big. So I think point taken. Just a quick thing, Yashish. When is this
what we are attempting to do is a very big change in the market.
Correct. Absolutely.
What we're attempting to do today, when you go to a hospital, a person at the back of the mind thinks, why is this operation happening? Is it because the doctor or the hospital is making money from this?
Yeah.
Right?
Yeah.
And it's a very big, serious problem.
Yeah.
So there are reports out there of various sorts, right? But let's not go by that. We're trying to solve that fundamental problem. Without that, how will the middle class have health insurance? How will it work?
Okay.
Just to complete that loop on the healthcare business itself, we take your candor that 50% chance of it failing, etc. What I just want to understand is your rationale of currently valuing it at close around 2,100 crore. What
No, we are valuing it at zero, my friend. Again, you are getting it wrong.
No, the amount that you've put in versus the stake that you've got.
Please
yes,
hear me out.
okay.
Please hear me out. There is cash coming in of 2,500 crores odd. The valuation is 2,500 crores after the cash comes in. There is something called pre-money and post-money value, very important for your, readers, because all of them are not financially very savvy. The pre-money valuation is zero, absolute zero. Everybody is coming in at cash. 2,500 crores of cash is coming in. I'm saying
Yes. Post-money is absolutely.
Post the investment is 2,500 crores. So if I put
point taken.
500 crores, I have 20%. It is as simple as that.
So which is what we wanted to understand. What was your rationale for giving 20% for that 500 crores as against 100% or 80% for that 500 crores or as against say 10% for that 500 crores?
Everybody is coming in like an equal partner, putting in their money to buy the share.
And
the company is being set up from scratch. There is no value attributed
Absolutely.
to the concept or to any other thing out there, right?
Yes.
So it is
Yashish, before...
unlike a typical thing, and I want to be very clear about it. The company is valued at the cash balance, nothing else.
Correct. Now, before we run out of time, because I want to ask a couple of other questions as well. So our colleague Yash did a story recently, very important story, on the regulatory front for your main bread and butter business, saying that the regulator, IRDAI, is not happy with general insurance companies, general and health, on how they have managed the EOM, expenses of management. Within that, what they're saying is, well, commissions actually have been very high. And, the regulator has communicated that unless this is brought down, there could be a cap on commissions. I'm sure you've seen the story. It was put out recently. I just wanted your thoughts, Yashish. How do you think about this? And how, if there were to be a cap on commissions, how will this affect your business? Because that is bread and butter. Go on.
See, our take rate is about 16%. That's the total revenue we make divided by our premium. Okay. The expense of management is at 30% in general insurance and 35% in health insurance. Besides that, this is a very large topic. It is more for the regulator to decide than for me to comment on. The regulator is the principal of this school. You are asking the prefect or the student to comment on the principal.
No, but will your business be
unfair?
The
regulator in their wisdom will decide what is right.
Yeah.
All I'm clarifying is we are at 16% and the expense of management limit is at 35%.
The point is the regulator is saying EOM is OPEX plus commissions. They're saying you've cut OPEX but not commissions. The way you manage that EOM number is by doing this. But commissions are high. Commissions have been climbing. So bring that lower. And hence the question, Yashish.
Yeah, so I think it's for the regulator. I don't really have a view on this, my friend. It is more for the regulator to decide. It's a bigger question than, I can answer.
Okay, Yashish, so to circle back to where we started, and since we've spent so much time, trying to make sense of PB Fintech's interest in PB Health, just leave us with some timelines now. The cash has been coming in. You're getting in the investors. When does the business come off the ground? And just remind our viewers once again, while you're talking about experience.
I just wanted to clarify, the cash has not come in yet. The cash will come in over the next
commitments are in. Days. Yes, the commitments are in. So therefore, what are the timelines? No, absolutely.
I wanted to explain. The money will come in by July end.
By July end, the money comes in. And then what are the timelines to get this network up and running, the better experience you're speaking of?
We should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
And by when do you decide that on which part of the 50% are you? 50% success rate, 50% failure rate? Is there any timeline?
I think we will know in about 4 years' time.
All right, 4 years' time. Okay.
All right. Well, Yashish, but we look forward to many conversations over the next 4 years, and it's always interesting speaking to you. We wish you all the best of luck as you build out that business, and I'm sure it'll be a success. It's not 50-50 with you at the helm. Thank you very much for joining us, and look forward to our next one. All right, that's Yashish with his perspective on the business, the underlying business, of course, the healthcare foray as well.